Hello and welcome to the Fibonacci free video for Monday, March the 7th. This is David Starr, and I will be taking you through things today, focusing on the S&P 500 and really in a crazy market like this with rapid changes in direction. I do find it easiest to focus primarily on the indices, and I'm watching a few things here. If we look at last week's high, it came in here right at a voodoo skyline and also right at the 61.8% retracement of this decline from the February 2nd high to the February 24th low. And that 61.8 retrace is a typical swing failure retracement level, right, and swing failure resistance level here on a bounce, where we'll often see a reversal from. So no real surprise that it came from there, but it highlights the importance of the action that we see today, because if we do look at the move up from that February 24th low to the high last week, we today broke back below the 61.8 retrace of that rise. So now we're back below that common swing failure support level, and that's just one of a few things that argues that that we may be headed to back below this this February 24th low. So obviously there are things that we're going to have to see along the way to keep that idea on track, and we can leverage a few things into that assessment. Now, one of the things that we can leverage in the assessment is, of course, what we've already just looked at. If we take the move down from last week's high into today's low, well, where's that 61.8? It's going to come in right at 43.34, and so certainly staying below that will keep the pressure on the downside if and when we get a bounce on the way down. And usually we do get some bounces. And the second thing is integrating our voodoo roadmap. So the voodoo fire line is the most important of these voodoo line levels, and they can be attractive. We ended up just shy of it here on the February 24th low and are headed right back towards that area again. Perhaps even going a little bit below, but this very well could be calling to the S&P 500 to beckon it to come down to this 4083 level. And the second is this voodoo line roadmap, right? So in that bounce, we weren't able to hold above this this snow line here at 4352, and not being able to do that really suggests that the bounce has run out of gas, and that we likely will be coming back down to test this level. And given that that snow line is just above that 61.8 swing failure resistance level, it could move if we print lower before we start to bounce. The 61.8, not the snow line. That's fixed, right? But either way, for now, so long as any bounces maintain resistance at or below that snow line, I'm going to look at bounces as an opportunity to look for additional downside here in the index. Look, depending on how you trade, you may look for smaller bounces, you may look for larger ones. I am seeing some signs that we'll dig into in the premium video that we could be getting ready for a bigger bounce, but we don't need to. Either way, I'm thinking sell bounces on the way towards lower levels. Again, so long as things act right, which means holding below that 4352 voodoo snow line, and if so, a bigger bounce, especially if it looks corrective, will be a spot to look for lower. That's what I've got. I will see you at the next update.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me